Hi, everyone. Thank you for joining and welcome to the Consumer Preferences Report webinar series hosted by Stitch and in collaboration with Yahtzee, which is a market research platform. We've been quite busy over the last couple of months, so this is actually part one of a 4-part consumer study series across a range of topics. The first report is e-commerce, as I'm sure you're aware, one we launched this week. And to follow will be travel, insurance, as well as online gaming. So be sure to stay up to date if you're interested in those topics. To introduce myself, my name is Jess. I form part of the business development team at Stitch, and I look after our enterprise partnerships. And joining me on the call is Dierwold Muller, who is Stitch's head of client success. And he also looks after our customer onboarding. Reason why I'm excited to have Dierwold on the call today is because he's exposed to a wide range of best practices and optimization discussions across our clients that come on board with Stitch. And I think he's best placed to provide some nice insight to the report. So Dierwold, I'll hand over to you. I think it's important that you start off with a little bit how we work with Stitch. It's pretty unique and I think a nice place to start. And from there, maybe why we're doing this report and what exactly this report is.
Yeah, awesome. Thanks, Jess. I think maybe a bit of background around how Stitch deals with clients and our philosophy to building a really client-centric approach to the partnerships we build is we've realized, like in the payments ecosystem in South Africa, one of the big missing elements is the fact that a lot of the players in the market have a very standardized approach to how they deal with clients. And we very quickly in our journey at Stitch realized that if we really want to serve the needs of these large enterprises who have really complex customer requirements, we need to go really deep with clients. So from the way we deal with clients, from the moment they sign, during onboarding, all the way to managing those accounts, we tend to see ourselves as a partner and an extension of clients' teams. And what that means is we literally sit with clients in their sessions when it comes to strategy, understanding their business, understanding their roadmaps, whether that's related to payments or not. And why this is important for us, it allows us to really align with what the main priorities are of clients and what the challenges are that they're currently facing in the industry. And that's really given us a really broad eye of understanding all of the different nuances when it comes to things like e-commerce and different industries and what's really important. Payments is a very important element to the whole client journey in e-commerce, but it's not the only part. And you can't really approach partnerships by just focusing on the one and not having a good understanding of all the different other elements that's involved. So over the last 2 years, we've been really in a position where we could see something like the e-commerce value chain evolve immensely over time, and clients have allowed us into their world to really understand what the main challenges are, and then holistically serving those clients with solutions that doesn't just focus on payments, but also looks at the client journey holistically. And I think that's why I'm excited by a report like this, because it really allows us to look at our clients and partners' holistic value chain and think about ways to improve it and really see where things are going in general.
Alrighty. Do you want to tell us a little bit about the report?
So I think a bit about the report. I think there's a few things that's important to highlight here. Firstly, what this report is not. This report is not a general view in terms of what e-commerce look like for all South Africans. We've taken an approach where we wanted to zoom into users that have shopped using online platforms before and prefer that in some category above brick and mortar. Why we did it like this, it allows us to focus on users that actually have experience in shopping online. So this report shouldn't be seen as a representation of people's ability or preference to shop online or not. It should rather be seen as a report representing South Africans that have already shopped online. What are the main factors that are important for them at this stage? What are the trends that we're seeing with those shoppers, and how has it evolved over time? You'd also see, I think this is important for companies to take into account when they look at this report, is what the demographics look like. For this specific survey, we had around 350 respondents, and you'll see mostly majority women in the space. And a lot of our clients, when it comes to the buying decisions, women is the larger majority buying segment. But for some clients, that's not the case. And then obviously this needs to be seen in context of that. In terms of income distribution, I think what we have from a sample space here is quite representative of, call it the general type of e-commerce experience. But again, there are businesses that's more focused towards the lower income market, where again this will need to be seen. This report will need to be seen with that in mind, that it might not be the most representative for the low income market, but rather as a general representation of people that we see are active on the e-commerce side when it comes to shopping and looking at all these other categories that we'll go into. I think those are the important things. And I think what's been interesting for me looking at this, and Jess, I know you'll touch on this, is compared to the report that we did the previous year and the report we did this year, is how things have evolved. And I think what's exciting about this is just seeing how much more work needs to be done in granularly understanding consumer needs when it comes to different segments, user behaviors, etc. And this is, like, I think, a great platform to open up those discussions and set the tone for further research that needs to be done in the months and years to come.
Yeah, awesome. Thanks, Dewald. As you mentioned, the report that we did last year. So if you haven't had a chance to go through the report we launched this week, you'll see that within that, there's a link to the report that we did last year. So quite nice, we're able to detect a few trends. So we released a report in about February last year around digital preferences. So not purely focused on e-commerce, but there were a few sections that were. And we wanted to highlight a few changes. I think you'll notice a key theme throughout this is that the space is super competitive. If you're in e-commerce, I don't need to tell you that twice. And what can change in a year is massive. Just in terms of online penetration across different categories, we saw an average of 10 to 30% increase in like how often they're using it, what they're choosing to buy online. And I wanted to dive into this a little bit. You'll see it across the report, but in this report, we have got groceries as well as on-demand food delivery, which have been split out and are the leading contenders in terms of amount of purchases online. Food and beverage in our last year's report was only 71%, which means it's increased between like 13 to 20% across these two platforms, and they've split into separate subcategories, which means the usage across is consistent. Household goods and health and beauty have increased between 27 and 34%, and clothing has increased from 23%. Also interesting, because you'll see when we dive into the different platforms that the kinds of businesses that were previously in store that are moving online. So we're also seeing a shift in not just what they're buying, but where they're buying it. With regards to actual payments, and I think this isn't just payments, I think this is the entire checkout experience. As Dewald mentioned earlier, when we talk about payments, we're in payments and we work with our customers, it's never just about the method. It's how do we get our customers to that method? How do we make it easy? Consistently a theme, I think this isn't too profound, but it's important that outside of all the competitiveness, that you're at the core maintaining an easy, fast, and secure way that individuals are utilizing your platform, choosing their products, checking out, and then ultimately receiving those. Finally, from a payment method specific perspective, we've got Pay by Bank, which is catching up with card. I think you'll look at thousands of reports where card is king. And in South Africa, we've got card is king, but also cash is king. In the online space, that's been previously quite an inhibitor. The launch of Pay by Bank, which if you're not familiar, it's historically been known as Instant EFT. So you'll see that referenced within that term in our previous report. But the banks are starting to launch their API. So we saw Capitec Pay launch less than a year ago, and the increase has been substantial. I think fighting a bit with cash there, creating a safer way outside of card for users to shop. So I think before we dive into the study, though, it's important we take a step back. We can go into all the different insights, and I think it's important to do so. But there's a fundamental point here of understanding your customer is key. And so we want to spend a beat on this quadrant. And I think, Dewald, important that you take us through this.
Yeah, awesome. Thanks, Jess. I think, to your point, taking a few steps back, data is only useful when you can categorize it to a certain extent where it actually informs your assumptions in your process. And, I think if you look at the journey on how e-commerce have evolved and digital experiences, it's very clear, like, the further we go along in this journey and the further we see larger adoption, the companies that really differentiate themselves are the ones that really understand the different use cases and the customers that go online and that visit their stores. And it's not good enough to just look at holistic customer experience and having a great UI and making sure your funnel is great. So from somebody going onto your website and looking at the click-through rate, looking at how many people actually add products to their cart, how many of those convert into actually intention to buy, and then how many of those payments are successful. Because that fundamentally misses quite a large extent of some of the use cases that users are actually using e-commerce for. And this is something that we've seen over the last 2 years, spending quite a lot of time with various of our partners, is seeing that different people have different use cases for visiting online shops, and some of that might not be to buy things. And that's important to understand, because if you as a business set up your metrics very like standardized in terms of you want to optimize click-through rates, and you want to optimize specific user experience and reduce drop-offs, some of that might not be taking into account why some of these users are there. And that should be seen holistically with having omni-channel in mind. So I think one thing that we often walk through with clients when it comes to this space is this like quadrant approach to looking at how to set up and measure your approach. And it's very driven by the type of clients. And I'll quickly like just voice over what's going on and what we're seeing here. If you think about the e-commerce experience, there's two really important levers for any company that they need to look at once a user visits their website. The one is, what is a user's intention to actually buy? Some users go onto a website or e-commerce store app to actually just explore, see products, and they have no intention to buy it at that stage. If you measure that user on whether they converted to buying or not, you would see that experience as failure, and you might start tweaking some of your measures to try and optimize more of those first-time users to move towards adding more products to their cart. But that would be fundamentally misunderstanding that type of user, and it'll be optimizing around the wrong things. So intention to buy is like one of the verticals that needs to be taken into account. The other one that becomes really important is then conviction of where to buy. So once a user has the intention to buy a product, where are they going to buy that product? And this will like stretch around. On the one side, you'll have users that goes onto a website. They know they want, let's say, a fridge. They know the brand they want. They know the color they want. But now the only decision is, where do they buy it? And that then becomes conviction around the brand they want to use, the company they want to use, the experience they want to use. And that's also important to understand, because a user that goes to a website with having no loyalty to any specific company will have a different pattern than a user that has a larger affinity towards a specific e-commerce store than others. And that's important to understand. So looking at this diagram, how this should be seen and interpreted is like looking at the ways you should start measuring and really basing your assumptions on when it comes to all of the metrics that we see online. And it's important to take into account, because all of the data we'll share from this slide onwards needs to be seen in context of the larger picture, because it is more complicated than just looking at like a overall strategy. So I'll quickly go through this. If you look at the lower quadrant, the dreamer, these are people with a low intention to buy, and they don't have any conviction on where to buy something either. These are type of users that you would find explore on different sites. It's the people that, let's say, they're looking at buying a house or moving into a new apartment in the next 5, 6, 7 months, but they already want to start looking at the right toasters and the right appliances that they want in a place. And the only thing they're going to do is shop around to look at different options. They want to see it, they want to experience it, and those type of users will click around, they'll move around on your site, they'll look at different products. They tend to look at things like the description, look at the different photos quite a lot, because they're still open for being swayed one way or the other. They don't have any intention to buy now, but they're starting to form their base foundation around what they would want to do once they're at that point. So looking at these people, they don't even touch the payment cycle. They don't even get to check out. They don't create a profile, but they essentially use these sites like some sort of a catalog. That is super important, because it also speaks to the omni-channel experience. Some of these users might have zero intention to buy something online. They actually want to go get it at the store. But the online experience informs that, and actually has then the way to sway them on which company to buy from when it comes to the conviction side. And that's important to understand, because the wrong thing might be to do is just solely focus on intention of that user at that stage, because they're only going to make the decision in 3, 4, 5, 6 months. Compare that to somebody that has already made the decision, they're ready to buy. It would be not the right approach to follow the right strategy the same strategy for both of those.
I feel like, to jump in there, I feel like the dreamer won't even put something in their basket, whereas your seeker may not check out, but they're putting into a basket. So you need to evaluate it on where they're dropping it off. And I agree, if you're not familiar with the buyer behavior, you're going to think that the dreamer isn't interested in purchasing, but they're still just sourcing.
Exactly, and a lot of companies would see those as drop-offs or failures. But in fact, that's just part of the longer sales funnel that these people would eventually convert to get over from either a brick and mortar store perspective or online experience. Speaking then, Jess, to what you mentioned, the seeker, these are people that has the intention to buy. They know what they want. They have a specific product in mind. They might still be open to a few tweaks around the product, but they know what they want. You often find this around like Black Friday, people that looking for various specific things and they're shopping around for the specific price, etc., etc. These people already made the decision to buy, but they don't have a conviction yet on where to buy. And those type of people, when it looks at the funnel and getting them over to the next stage of actually adding something to a cart, etc., that becomes like super important. Interestingly, around the cart experience, we've had like several clients that has spoken to us around how users use the cart experience. Like a lot of clients that we've worked with, have this experience where users actually fill their cart and then they just park it there for a long time period, over months. And then later stage, they would actually use that as their wish list, and then they'll push forward. So people actually use that experience to favorite specific products because that favorite experience might not exist on a website. And again, that's important to understand. And if you look at that data and you just see your carts get filled, but people don't convert, you need to look at how do you get your button to change or inform people better on how to make a payment. Like, that's like interpreting the data wrong.
Yeah.
And that's why it's important to understand that type of user.
I am one of those users. I use my, especially on like a Superbalist or a Takealot. And it's also interesting when you look at cart expiry, because there's a few sites that don't let you keep it in. And often that doesn't force me to buy it unless I'm probably in another quadrant. If anything, I get a little bit frustrated because now I've lost that item, as opposed to when it's there, when I'm ready to check out, I can do it. And the other aspect is when I want to buy something small and I may be below the delivery, I'll then wait and see if something else pops up so then I can get above that threshold and then make the purchase. Bit of a risk because it might be sold out, but that's how I use it.
Yeah, 100%. And I think this becomes interesting when you look at things like Black Friday, etc. How do you prepare your users for that? Because a lot of people might have their carts already set up for Black Friday, but they can still be swayed. And I think like marketing teams and UI teams and your communication approach there like really matters. And then I'll quickly touch on the action taker and the loyalist. The action taker is somebody that has made their decision on where to buy and they've made the decision on what to buy. That's an imminent purchase. This is only where the payment experience really comes in, right? Because that user don't have anything else prohibiting from them from making the purchase. And that's when like having a seamless payment experience like becomes really important, and where like you cannot afford to lose a user that has decided to buy a specific product at your place. And you cannot afford to lose that user at that stage. That's like the most costly loss that you can make, given that the user is basically at the finish line. And that's where we'll and that's going to be the focus around the payment experience. What users have there is once they've actually made that decision to buy at a specific business, a specific product, like what do they prefer in terms of that flow? It's very important to think as well, like what is that first time experience of the action taker? What does that result in for future purchases? And that's the last item I'll touch on, which is the loyalist. The loyalist is somebody that do not have any intention to buy at any stage, at the current stage, but they know if they've got certain appliances or products that they want to buy, they will go to this brand, to this company. And that often a large part of the loyalist is informed by past experience. And that's when the action taker, the seamless experience becomes super important. And I think just like what this type of, I guess, approach highlights is companies' abilities to be able to label users online as early as possible and being able to segment them in like a simple a quadrant like this becomes super important to start pushing you and driving your teams in the right direction when it comes to setting up metrics and actually understanding what success means. Because all of these users will have different things what success means. And if you apply the action taker across all four of these quadrants, I think you're going to have a pretty bad strategy. And it'll be very hard for you to sit in front of a board and decide, explain why does why do we have like a 40% drop off between people that look at products and don't add it to their cart, or from their cart going to a payment experience? And that, I think, is where the real treasure lies with online as we're going forward, because the real differentiator lies in terms of how well do you understand your client at that point when they're there. And I know we'll speak around omni-channel a bit about this later, but online becomes a huge enabler for omni-channel for brick and mortar stores. A lot of brick and mortar store sales can be driven by online experiences. Sometimes hard to measure, but some appliances, for instance, people don't want to buy online. They want to have instant gratification. They want to go to the store. But then the question is like, how do you make sure that the experience online is as thorough as possible, that they actually take the next step to go to the store? So yeah, I think like there's obviously a lot of words. There's a lot in that, but I think the main point here is a data-driven approach, by being able to label your clients super well as early as possible by looking at user behavior once they visit the site, will really enable you to treat customers in the most optimized way, and actually looking at the right metrics when you measure success across like 4 different types of users that we highlighted here.
Yeah, thanks, Dale. That's spot on the execution on the action taker, and you'll see as we dive into the report now, it streamlines us quite nicely into the first question that we asked in the report. Is the highest driver is food and delivery and groceries, which is your on-demand, which is like clearly your action takers. And like true to your point on like leveraging the omni-channel or understanding in-store, I mean, it's not often you'll go look in Checkers, then you'll go look in Spar, and then you'll go look at Woolies. It's convenient shopping. You'll go and you know already what you're going to buy. Similar patterns happened with the online space. You know if you want to use 60/60, you know if you want to use Dash, you purchase the product, you know what you want to buy because you generally have a list you're fulfilling, and you're going straight to that app, you're checking out. What makes them easy, similar to your food delivery, is my address is loaded. They know who I am. I don't need to log in because I'm also using it a lot. And my payment method's there. So it's just a couple clicks once I've chosen my goods. And I think that's driving a lot. You'll see a trending theme in the report because of this category being the highest driver, centering a lot in the action taker. Sorry, go for it.
Yeah, I think that's solid. I think, for instance, to your point, like a grocery section, you like the split between these 4 quadrants a lot more on the action taker side than on the dreamer, the seeker, because people have a need for groceries every single day. And at the end of the day, the big differentiator becomes that experience, like delivery time, how easy the payment method is, how easy it is to return, etc. And like that's a huge part of it. Whereas for larger purchases that people buy maybe once a year, maybe once in 2 years, 3 years, all of the other quadrants become in play very much. And that's something to take into account.
For sure. Also interesting to look at, do you be completely niche? So maybe it's something that people buy every year, maybe every 2 years, or do you diversify, go into a variety of products? So you're creating that habit for some products, but then for others, you're a go-to. So you leverage between the action taker and the loyalist. But I think quite nice to dive into the report now, given that. So as we go through all of these, try keep these different archetypes in mind. And again, to what Devold said, leverage based on who that user is and maybe why they've suggested that particular, why they've answered the report in that way. But to start off with, let's just have a holistic view. This is quite a busy graph, but super interesting. And I would urge you to go through it when you do go through the report in detail. I'll guide you through it a little bit. But what we're looking at here is, from the study, what was the highest in terms of online penetration for categories, and then the individual platforms. So I spoke to it a little bit earlier when we referenced the previous report. But you'll see, as mentioned, the food delivery as well as groceries are leading in terms of how often these users are making use of online, followed by clothing and apparel. We've then got our household goods as well as appliance. And then we've got alcoholic drinks, which has popped up, but significantly lower. And I think we had a discussion around this. This is mostly because if you look at the leading players here, is that the alcohol would likely be an add-on to my groceries or to my food delivery, not necessarily going somewhere to purchase. Seemingly, that seems to still be happening a little bit in store. But the high drivers of food delivery and groceries just shows how convenient shopping is so successful online. This instant gratification, it's driving weekly habits, or consumers using it a lot. And again, when we mention those are your action takers, they know what they want, they need to get it, and they want to get it in a specific time. It's easier for them than going to the shops. Again, followed closely by clothing and apparel, which I think we'll dive into a little bit. Very interesting platforms there. With regards to specific platforms that we've seen, Checkers 60 has come out of nowhere. So in the last report didn't even surface. And I think specific reference to the 60-60 element here. They're competing in 3 categories. So they're winning in groceries, they're winning in food delivery, and then they're competing in the alcoholic drinks as well. Well, no, they're winning in alcoholic drinks as well. I think the variety of products here that they've been able to leverage is pretty similar to what we've seen with Takealot, who you'll see behemoth of a business, like consistently performing in terms of usage. It was the highest used platform in our last report, but you'll see leading in household goods, leading in appliances, and then also popping up in your pharmaceuticals and beauty. So again, you'll see later in a few of the answers that variety of products is considered a priority when consumers are choosing their platform. One-stop shop, you're able to leverage all of that. Potentially a little elephant in the room is how this will change over the next year, given how we've seen last year change so significantly, is what will happen with Amazon launching. How will they compete, and in what categories will they compete?
Yeah, I think just quickly on the Checkers 60-60 speaks a lot about first mover advantage when it comes to grocery delivery. They've done a phenomenal job in terms of how they've rolled this out across the country. The color of Checkers 60-60 has become iconic. In the country, and that's just through super clever marketing and the rollout of these drivers. You know, that everywhere you go, you see even Uber drivers that, you know, they'll move between Uber Eats and Checkers 60, have those like iconic Checkers 60 boxes at the back of the scooters, so it's highly visible, and I think they've just done a really, really great job. So I think they set the trend, and for the rest of the players in the market, it's a bit of catch up there, and I think it's very hard to catch guys like this that continuously move as they are, and like their marketing game has just been like on top of it. Interestingly enough, for me, you know, moving on to the clothing and apparel side, there's often the thinking that creating something new and coming into the market when there's already other players in it, like, is quite hard and can take a lot of time. But I think like what a player like Bash has done in the market over the last 2 years has just been phenomenal. They're at the top of the App Store when it comes to online buying online goods for the app, and they did that in a period of like 2 years, less than 2 years, and I think that's just like incredible to see, because it shows you what that you can do. I think the Bash team is super strong in the way they approach that, and I think that's a category, that's a specific company that we can expect to continue to see, like, to push the boundaries. They've got a lot of brands behind them, if you think from all the way from clothing to appliances like at home, etc. And what we're seeing on our side, that's definitely a business to keep our eye on. To your point on the Amazon side, very interesting to see how that's gonna go down. Takealot has improved their delivery experience tremendously over the last couple of years, and they've got a really good footprint across the country. It's going to be interesting to see how Amazon is going to bring some of the elements like Prime, etc., to South Africa, and how that might shake up the market. In all, like, I think our view is that Amazon coming to the market would further just like elevate people's preferences to buy online, and I think it'll be interesting to see what this graph would look like next year this time, once a brand like that has gone live and actually got some traction in the market.
Agreed. I think the question on everyone's tongue is just when with Amazon. And going back to your Bash comment, I think very interesting, because I do see it as a contender across multiple categories a year from now. And as we're seeing on the top 3, so clothing is probably the most interesting for me with the 3 contenders. So we've got Superbalist coming in 3rd, which is purely online. We've got Woolworths, which is, I mean, a wonderful store experience. I love going into Woolworths. It's got everything there. It's a one-stop shop across your food, your clothing, etc. And they're diversified across their products. But then their online experience as well, also with the launch of Woolies Dash. But a smaller store network to the one who's winning, which is Mr. Price, who is generally on your middle to lower price point, large store network, but is now, I mean, last year they weren't in our report for online. I mean, I think this has historically been a business that has been mostly brick and mortar. And what's interesting here is I went on their website. So again, this is an assumption, but their first option when you click on delivery is at the top is click and collect. So I think what they're doing here really well, similar to what you were mentioning across the quadrants, is they're allowing users to look online, to search online, but then they have that ability to buy it online, then they can go pick it up in store, they can see the goods, which I think is catering to that market. And I think with the store network that Bash has, they will be able to leverage that super successfully as well. Yeah.
Yes. the last thing I'll add here is I think what'll be very interesting to see evolve is the user experience when it comes to buying clothes online. For a lot of people, it's hard to buy a specific clothing item online when you actually haven't put it on yourself and have seen it. And I think over time, what we can expect to see is that users will become more and more comfortable making those purchases because of the way the online experience have evolved to actually get users to see what it would look like, etc. And I think there's some interesting things happening there in the space that we can be excited about in general.
You know what's going to be super interesting is leveraging your store network if you have one. And I completely agree, like having that tangible good, being able to touch it. In more sophisticated markets, we're seeing like augmented reality, virtual reality coming. So if I buy my couch, I can see what it looks like in my lounge. I can give my body shape and I can try on different outfits. Super interesting for those that are unable to leverage how they're going to use it. I personally haven't used it yet, but I think creating that convenience again, if you can get it right, I think we'll see some great adoption.
The last thing that I'll mention is the aspect of convenience, specifically delivery and payments, etc. If you look at like these instant gratification or needs that arise often, like the action takers, the people that on a specific category, like it's something you need every day, like at which stage do you, for a new user, expose them to how easy and how convenient the method is? For certain brands, like if you buy large appliances, like, you know, for me, it's not the most important that thing gets delivered now, tomorrow. For me, it's more important that it's a certain quality. I haven't bought this before. Like there's other concerns that's in mind versus just buying milk and bread. So I think Checkers 60 has like, they have it in their name, right? Like the whole thing is around quick, fast experience. Whereas I think like things like a macro or appliances, that type of thing, yes, the delivery experience is important, but that's not the main seller when it comes to actually getting people to convert over the line. It will become important in terms of, do you actually convert those users to loyalists afterwards in terms of how easy it was, etc., compared to the store experience?
Yeah, no, 100%. I think that's why maybe Mr. Price Home isn't as high as Mr. Price Clothing. The ability to go into that store and feel it is more important than when it gets delivered. All right, so one final point on this is just, you know, we've spoke a little bit about how Bash has recently launched, and we're interested to see Amazon's impending launch. On the clothing side, which is going to be interesting, we've got Wish popping up here. I was surprised to not see Shein. You know, your Chinese marketplaces that are launching, and I'm not sure how many of you are familiar, but another player called Temu has launched. They launched either December or early Jan in South Africa. If you go on your iOS store now, they are the App Store. They're the top downloaded app at the moment. Again, just like referencing how competitive this is and how quickly things can change, and it's happening in real time. I mean, this month, the interest in it has been exponential. Alrighty, so going into the next topic, so we've looked at the platforms, we looked at the different categories. Based on that, we then asked users, what factors make you choose one platform over another? So I think overall theme here is that it needs to be across the user journey, so not just on checkout, but when you're browsing as well, it's just ease of use. It needs to be safe, and I need to have a variety of products. I want to have choice. From a payments perspective, 3 out of the top 6 were payments related, as well as checkout related. So again, we're looking at users here. This is referencing the delivery, the amount of users that shows that we can see that they're those action takers. They want to be able to pay. They want to be able to check out pretty quickly, and they have those multiple payment options. But the buyer behavior here is very much leaning towards that action taker. And I think it's important to leverage making it easy, then making it easy for them to check out.
Yeah, and again, I think it's useful to look at this data holistically. What makes sense is like it's easy to find what I'm looking for. If you look at it, like the larger proportion of the sample are people that are often shops using like grocery stores and online grocery stores, and that's important, right? It's getting to the right product quickly, fast, and then having the varieties that's there. Whereas, in other brands, like there's a bit more of a like long tail experience in terms of users trying to explore different products rather than having a specific product in mind, and that obviously also like sways a bit of the data. I think a few things that's important for me and interesting for me is when you look at like just the checkout experience in general. It's interesting, like we still see a lot of players in the market where small items in terms of their checkout journey are like not where it should be yet, and I think it's a combination. I think the challenge of technology, like it's often really hard for retail or traditional brick and mortar retailers to evolve into a digital player. But if like we've had this many times before, where you go through a checkout flow and it doesn't accept your email because your email might be like mine is, it's got a money at the end, and some people just don't allow that. And then it's like, I can't make this purchase because of something as simple as not having the incorrect validation on an email at the checkout. Another interesting thing is looking at like just delivery address. A lot of people don't have like an automatic lookup when it comes to delivery address and making that process as seamless as possible. Like when I look at the checkout form and I need to complete like 7-8 fields and there's no autocomplete based on some of the like data that provide, like it becomes really hard. And it's a small change that just has such a big impact in that journey. And I think that becomes like really, really important, especially when it comes to like buying larger items and having like fast deliveries, like having the address perfectly, making sure like your experience and giving enough detail for the drivers in place and making sure that actually gets followed through when the delivery actually happens. It's super important.
I think interesting what you mentioned around the delivery is not having it be able to look up. But the other is, I think a lot of businesses have tried to simplify that and cut corners on the delivery, where it's one line item and you have to type that in. For me, I live in a complex. There's a unit. You have to obviously have access to it. It's not as easy as a standalone house. When we order, when we're at the company, we've got our business address. And then you start creating, yes, it's simple to check out and I write it in one line. But when it gets to the delivery, I haven't thought that far, because now I'm unable to get my delivery, the driver's calling, he's lost, and from like a logistics perspective, it's a nightmare. So it's managing how to make it easy, but how to make it super clear so that there's no questions once that checkout's happened.
Yeah, and then I think a last item to maybe mention here is when it comes to like having multiple payment options. This is a very interesting one because multiple payment options and type of payment options have implications both for the user and the business. On the business side, some payment methods are just more expensive than others. Like what we see, pay by bank in generally in the market is less expensive for the merchant than credit card. The conversion also with these different methods looks differently. And what we're seeing evolve, and as the space evolves, is payments generally has been very static in the space. Like, why? Because like for you to have multiple payments and being able to change payment methods based on the user is very hard from a technical perspective, because like having multiple payment providers in itself already has so much work that needs to go into that, managing the recons, the integration itself. It takes a lot of developer time up, etc. And like what we're starting to see here becomes interesting is specifically in the space of orchestration, payment orchestration, where it's a product that Stitch offers, where essentially users or large merchants don't have to worry about integrating all of these payment methods anymore, but essentially it's all hosted through this one single API. That then allows companies to start focusing on actually tailoring a payment method based on the user that lands on that payment page. You would look at things like conversion, you would look at the commercials and the pricing of the payment method. You'd look at what the purchasing amount is, and then you can start diving deeper and actually switching between methods seamlessly and optimizing around that element, rather than just having a static page with options and you letting the user like choose that, or at the end of the day, what the positioning of the first or the second one is has the biggest sway around the end result of what the users use. And I think that's the exciting part that's evolving. And I think tailoring payment experiences based on the data you have, by having that ability from a technical perspective, I think would also be a game changer as this evolves.
Yeah, and I mean, we've been in so many conversations where, yes, you want to give them choice, but at the end of the day, you're running a business. You need to choose what is the most cost-effective method. And where orchestration has played really well is like, I need to make it easy. I need to make the payment easy. I need to offer a variety of products, but then I have no control of what the user's buying. Yeah, if I'm Takealot, they may come and buy a fridge, and that's great. They can use probably the most expensive payment method. But the next day they're coming in and they're buying a single book. Maybe they're below the delivery threshold. So being able to intelligently, provide the methods that your customers want, but then intelligently choose based on the use case or what that user is buying, is even going more granular than just like, what type of user do I have on my page? And we've seen that our customers that have been able to leverage orchestration through Stitch in that way are seeing like a massive success in like their different margins just at checkout.
Yeah. Last item that before we move on is having a payment that's secure. Shakira. I think that the interesting part there for us from a UI perspective, and we've had a lot of like exposure to this with different clients, is seeing making small differences to the UI component when it comes to the payment experience has a massive impact on how people perceive the safety of a method to be. An example, what we saw back in the day is like basic colors has a big impact around how people think about payment methods. Sometimes blue is more associated with like trust and safety than like a red color that sometimes comes through, which is like, it's mind-boggling, but that has an impact. We also see a lot of merchants don't spend enough time in actually unpacking what is the right level of user education to give when a payment method is presented. Like, envisioning it's like you often have this little information button you can click on, and making sure like all of that key information is captured there is really important, because it might be a small fraction of users that would click on that and look at it, but at the end of the day, that might be the do or die for those users. And losing them on something as simple like that is like hard. And I think for users that sees that, whether it's a consideration or not, it just heightens or increases the level of trust to know that like these things are really well thought through and all of the information is taken into account, and their concerns for safety and security is actually important. And our team spend a lot of time with clients unpacking that. Once we go through the onboarding process, is how do we ensure the client journey is optimized around all of these key elements that users really feel is important before they make that final payment.
Yeah, I mean, the most frustrating thing is when the client clicks or a user clicks on a payment method and then drops off, because there's not much. It's very difficult to do. You want to limit that as much as possible by being super clear. With that, I think we'll dive into it a little bit, is why Capitec Pay has done really well, just in terms of recognition. Like, that was not just color, but brand recognition. I immediately trust it because it is my bank and they put their name behind it, they own it. And I think very big reason why we've seen such a big driver for Capitec Pay volume in the last year. Awesome. Okay, so the next two will be around what makes a digital shopping experience good or bad. And then the next we'll dive into specifically what makes a payment experience bad. So I think we wanted to focus on, once you get to the payment, that's a whole nother journey, but getting them to make a decision on your site. And obviously clicking on, okay, I'm going to check out now, is a critical point. If we look here, and again, this is true to the fact that we've got most of our on-demand deliveries here, but clear delivery timing was like the leading player in terms of what makes it good or bad. There's so many things we can discuss here, like the topics and the categories that we're leading are driving this, because it is your convenience and on demand. But I think in general, even if we look at like a Mr. Price, who's previously been on like the lower side of the income bracket, this still shows that there's like this embedded mistrust in online shopping, at least in South Africa. There's a massive growth. We are actually, our online penetration is growing higher than that globally. I think globally is at around 18%, and we're currently at 21%, given like our like variety of consumers and different income brackets. That's massive, as well as the reliance on cash. But I think in terms of online delivery, where the food, groceries and food delivery and the Uber Eats have done really well, is that I can pick my delivery slot. I can track the driver. So it's not, Aramex messaging saying your delivery will be ordered at some point today. I can literally follow the guy, zoom in. There's less risk, because if it doesn't arrive in the slot that I know something's wrong, and I can fix it. And generally it's a lower order value. So if I lose out, if something's wrong. It's the ones where you order and you don't know when it's coming. And I think that was a lot of hesitancy with the likes of your Sheins and a lot of these online players coming in that perhaps had like an import constraint. That caused a lot of hesitancy, because you're unclear on when you're going to get it. The other side is a clear delivery timing is generally people are buying when they want to receive something. So if I buy on Wednesday, I want to receive it the next day. And being unclear creates like a mismanagement of expectations, which I think creates a customer service nightmare that both you and the customer want to avoid.
Yeah, I think interesting. Yeah, and I think this is more comment towards enterprises or businesses that don't have their own internal in-house delivery ecosystem. Is there's just a lack of a standardized API available when it comes to delivery, and this makes it really hard. So a lot of the firms are often just exposed and like dependent on whatever the end result and like the end states of the different steps in the delivery process are, and they're exposed to whatever that company can give them, and that makes it hard to embed a really customer-centric process in this. And I think that's where like from a different side, like there's still a lot of opportunity for innovation in that space to bring those things together really well. I think what is important is to spend like proper time in that and understanding it and understanding how that differs by sector and what clients really want from that. What's really important on this element as well is like, how well does your team actually capture feedback around that experience after the product has been sold? Not always easy, because a lot of users just like skips that email that gets sent and they don't click on the button to review a service. One thing that you can know, it'll be overweighted towards when things go wrong. And that's the areas to really dive deep into. And one thing that we see clients do actually pretty well is having an overlaying like support team that is super swift with answers when it comes to questions on delivery, because that creates confidence. And it's all about confidence and trust when it comes to delivery. There's an expectation and for something to happen at a specific time. And the more you can manage that expectation and keep clients aware, the better that experience would be, and the less you're going to have bottlenecks when it comes to the final client experience on the delivery side.
Yeah, I think even like offering, I mean, I'm sure it frustrates a lot of people, but offering that premium, if I pay extra, I know Takealot does that. I mean, I'm not too strict on when it arrives. I'll do a standard delivery, but otherwise it's generally like I'll pay for that premium. I'll pay the extra 50 Rand if I need to receive it. And the ability to have that, I think, is good, because you're putting the control then in the user's hands. It's just up to you. True to what you're saying with the support is to be transparent and make sure that if that's not happening, you're communicating it. And it's going to be super interesting as well, because you notice with Black Friday, we've got this trend where immediately when Black Friday comes, we have this rush to purchase, but it's a pretty standard that most businesses say, hey, we've got high volume, so you're going to receive it 10 days later, as opposed to receiving it when we would normally. And I'm going to be interested to see how that slowly shifts, especially with Amazon coming into the market, who is historically like globally known as no matter what, they deliver next day or the following. So there's that competition there, at least in those big peak periods, to deliver at the same that you would in like your lower periods as well.
Yeah, the big competitive edge here that I think is because South Africa is so spread out. It's tough like to deliver things. It's like if you think about your main hubs, Johannesburg, Cape Town, Durban. The companies that is at advantage here are the ones that's got a really good brick and mortar footprint across the country, because moving things around and managing stock across these different locations, if it's well set up, it can be the biggest nightmare as well. But if it's well set up, I think they can have the edge there in that component compared to businesses that don't have that.
No, for sure. The second most most chosen was easy to pay, which I think eases us quite nicely into the payment experience, because that was just a general shopping, again, showing how important those payments are, no matter if you're at the checkout or not. It's what people are thinking about. So I think spending a beat on this, there's like 3 points I want to drag out is, and it's quite nicely on above each other here. So we've got 29% who said it's easy and fast and easy to make a payment, with 10% saying I could check out as a guest without creating an account. And I think this is a constant battle for businesses. We're in many conversation with our customers around like, do I create the guest checkout so it's easy for them? But then, what I'm doing is I'm creating less friction for the first time, but it's continued friction every single time. How much friction is too much friction the first time a user uses my platform, so that the next time it's easily to check out. Some of our customers don't even want to have guest checkout. They're like accepting the friction, and that is what it is, because they don't want that even as an option. Whereas here we're seeing 10% actually would prefer to have that. They don't want to create their account, which isn't showing much loyalty to their online shopping, which could cause some concern for e-commerce businesses.
Yeah, it's interesting. I think we spoke about this before this chat. It's like, how big do you need to make that button where you can check out as a guest versus actually getting people to create a profile? What's interesting for me is like what you obviously, and going back to that quadrant that we had, the loyalist, right? The more information you know about people, the better, because you can classify them better, you can give them more personalized experience, and that leads to like better loyalty towards a brand and better experience, etc. What's interesting is like often that can come in the way of making a purchase, and it can add more bottlenecks for the users to get over the line. And like, how do you manage that? And I think it's interesting how companies have started thinking about this, where if you think about it, like in the beginning, your first purchase, you want to get over the line as quickly as possible, and you want to remove as much as possible that's not required in the process. But then, and until payment is made. But then an interesting part is where we've seen some of our clients have started using the delivery process, when something gets delivered, when somebody needs to sign for it, etc. Obviously, depending on the type of product, to add specific information fields that needs to be filled there to enhance that profile further. So if you think about a large appliance, often people receive that in person, or there might be specific information that you don't have about them. A user would be less like worried about adding specific information at that stage, because it's not stopping them from getting something. It's actually like, it's almost like a checkbox to get that, and that then can enhance the next experience, and it's actually not adding or creating any burden on the user. And that's interesting. Obviously, you need tech to enable that. You need the right partners to enable it. Not easy, but I think people are going to become more innovative when it comes to how do you build up that holistic profile over time, rather forcing users down a specific route that they might not want to go to.
Yeah, to what you're saying, an obvious category for me there is electronics. If I'm buying a laptop, I don't mind how much friction it is. I need to make sure that, the lump sum, or maybe just in general, your higher order value or your quality products. One that surprised me was that only 10% said mobile friendly. So I think this is an interesting one, because we've got a few businesses that don't necessarily have an app. We've got others that are heavily app focused. We found with our customers that are able to standardize the experience across both their desktop and their mobile, like working amazingly. You'll see in our travel article, we'll go into the travel report, we'll go into it, how Safway has been able to leverage that mobile app. And it's just been such an amazing consumer experience. I think leveraging that mobile app to sign up, because you're used to signing up when you're on an app and adding in your details, can help with that lack of guest checkout, because you're constantly needing to sign in, and you create your profile, you can store everything. It's a lot more accessible. Leverages social media as well. So if I see something on Instagram or Facebook, I can immediately click through to my app, as opposed to looking at the desktop on my phone. And then the other side is, again, we're speaking a lot about omnichannel, like being able to buy something online, go pick it up in store. If I can just scan my QR code that I have on my app, it's much easier than having it on my email, having to shift between what is on my desktop and what is not. So I expected a lot more. I also know WhatsApp's becoming massive, especially WhatsApp for Business and those in-app payments across a lot of conversational commerce businesses. And that is becoming a very convenient way to shop, especially for things like add-ons. We see it a lot with, for example, again, on the airlines, if you need to add on a bag, whatever the case may be. Even if you look at your on-demand, if you need to add on a grocery that you've forgotten. So I expect mobile friendly to be increasing significantly over the next year, and if not, I'll be quite surprised.
Yeah, 100%.
So we've spoken a little bit around payments in general, but going into the different payment methods. So we've seen throughout the report that having the payment methods, I want a variety of payment methods. And I think this is quite overwhelming for a lot of people, because it's how do I build on all these new payment methods? How do I know which are going to work? In an enterprise space, we hear the word business case almost daily, and assisting with the motivation with the powers that be, in that this is the payment method that we should be leveraging. So across this, just to spend some time on these stats, is we mentioned in the beginning of the webinar that card has historically been like a massive driver, with like 20 to 40% penetration than any other method. If you look at pay by bank, like easing up quite nicely. We've got pay by bank with Capitec Pay coming in at 26%. So even though Capitec Pay is branded differently, as a method, on a method layer, it is part of pay by bank. So that means that in its entirety, we've got 70% creeping very closely to card. The other thing is if we look at Capitec Pay, it was launched less than a year ago, and it's now the top 4 in terms of payment, and it's getting really, really close to cash. I mentioned earlier, specifically with the user base that Capitec has, I think historically less card-driven, more cash-driven, and we're seeing them shift to digital. A lot of the other banks are looking to launch there, so we see this only increasing significantly. What's going to be interesting is a year from now, Gerald, are we going to see like Nedbank Pay, Absa Pay, Standard Bank Pay, or is it just going to become a single method? That should be interesting, because right now Capitec's kind of leading as its own brand.
Yeah, 100%. And I think with that comes all of the pain for merchants is you need to integrate all these methods. And how do you do that? Again, I think orchestration offers a great solution for that, but it is something that the space needs to continue to think about, because like one of the most scarcest resources there is developers, and how much time do you want to spend on these type of like new methods that continue to come through. I think like one thing for me that stood out is when it comes on cash on delivery. It's not something that is available everywhere in any way, actually. There's a lot of like large e-commerce providers that just don't have this option at all for obvious reasons, right? Like the logistics with cash on delivery is hard. There's a lot of risk inherent in that. You know, you go through this whole process and then somebody don't pay you when the delivery happens. There's the risk of actually moving the cash, etc. But I think that is a space where a lot of innovation can still happen, and one can almost like couple cash on delivery with vouchers. Vouchers is essentially just the ability to use cash and buy a voucher of a certain value and then use that code to be able to redeem a specific product. And quite an expensive method. Vouchers in general cost is almost like double to triple that of card, which is already an expensive method. And people e-commerce businesses will have to figure out, like, based on who their target market is, like how much do they actually offer that type of method in the space. But I think cash on delivery is something that is not offered a lot. I think there's still a lot of innovation that needs to come to that. And the large thing is managing all of the risk inherent in that process.
I think it's meeting your customer where they are if they have cash, but managing that safety. We see safety and secure being a common theme across what they need on online payments. And the biggest fear with cash is either having it on yourself or giving it to the driver, and obviously, the safety of them commuting around with cash on hand. One final thing here, which is also a positive with an upward trend, is on Pay by Bank with our responders. Majority of the respondents that picked these two methods were in the 18 to 39 age category, which means as time progresses and more, well, I guess, individuals or youngsters are coming into the e-commerce environment and are turning 18, we're seeing already like an appetite to use these new payment methods, which means card is in the nicest way in a little bit of trouble, and making sure that you're able to have these alternate payment methods. What two that we wanted to fix or to spend some time on is, I mean, these are 5 methods. There's so many more that we could dive into, but looking at how do we stay current? How do we give the methods that we want? But how do we also manage it with our legacy systems? And it's an absolute nightmare to add on a payment method, let alone all the banks launching their APIs and then all these other methods that are coming into the fold. We've picked up on 2 that have been pretty exciting and we want to spend some time on, and we mentioned it in the report. Is one is the need and the ask for digital wallets, and the other is crypto. So we'll dive into that a little bit just to see. It's super interesting results here. I mean, Devil, you are, I think it's probably the wish list of most of our customers across digital wallets and crypto, and the ones that they're getting most excited about.
Yeah, 100%. I think this is also going to impact what we're going to see on card. More and more people get access to credit cards, and that then enables these type of experience like Samsung, Apple, and Google Play. I think for those listeners that plays paddle, they might have had this using the Playtomic app. This was before I've seen any of these options available in South Africa. Is like doing this really seamless double-click Apple Pay transaction when you book a paddle court or something like that. And I think this type of method is going to speak a lot to these type of user journeys where that ease of process is going to be very important. So think about your grocery deliveries, etc. That is going to be like really, really important in getting it over the line. I would not be surprised if we don't see double this slide in a year from now, based on what we're just seeing with user adoption. It is just the most seamless type of process that you have. All of us use our phone more than anything every day, and having that thing where your card is loaded and it's just 2 clicks really makes the process so much easier. I think while it's also like as an interesting part to play in terms of how the space is going to shift. Like before this, a lot of the payment methods basically replicated that with a bit more steps, which is like your QR payments. But now that you have this process where you can just double click and based on your Face ID, something can be processed, I think this is going to be really important for users to get right and get embedded in their system like as quickly as possible. What is interesting here for merchants to look at is like, what is the uptake on things like Samsung, Apple Pay, and Google Pay look like, and what base of their clients use those type of phones compared to others, and this will drive which ones you introduce first than others. And I think rather than going an approach where you introduce all 3 at the same time, because just in terms of the resources that it requires, it's important to focus on like, based on my customer base, the type of phones that they use, what is more useful. What's interesting for us, given the way we track payments, is we know exactly which devices are used in the process, and we can give clients quite like accurate estimations around what we're seeing on their payments portal around what is the best type of methods to introduce and what the potential uptake could look like for these methods. And then tracking out that what that shift looks like was going to be super interesting, because we have a view on that, call it lifetime client journey with some users across the board. And when you start seeing users moving from traditional card entering your details to Google Pay, how quickly that happens, how it happens, that's going to be interesting, and something that I know our data team is tracking closely on the side.
Yeah, for sure. The next is cryptocurrency. So I think an interesting one as well. I think digital wallets, we've seen a more consistent excitement across a variety of industries. Crypto is like throwing me off a little bit. I myself am not much of a consumer of crypto, but the kinds of industries, I can't share on this call, but the kinds of industries that have been interested in bringing on pay with crypto. So for context, Stitch it's our latest method that we've launched. It's called Pay with Crypto. It's an awesome payment method, and the excitement that we've seen from some unsuspecting businesses that I think you would historically think, they're they're not as dynamic. They're very big corporates. Maybe there's a lot of red tape. They're really keen on this. And we're seeing quite a big shift in these payments. I mean, even in the airline space globally, being able to pay with crypto, using it as a transactional method as opposed to just this investment. South Africa is actually the 7th market globally in terms of like crypto penetration, which is very interesting. But I know, Deval, you've dealt with quite a few of our clients on this new method.
Yeah, absolutely. It's always interesting speaking to clients when it comes to these new methods, like how clients think about this. On one end, a lot of merchants don't want to be the first to try a new method, and that one can get, because sometimes, as payment methods has evolved, some of these payment methods were just like not. Some that's evolved over time that's died again is like just not been great, and people move on. I think the other risk here, often when it comes to payment selection or adding new methods, is how does that eat into other methods, because the source is the same. So think about like adding card when you've got instant EFT. Some users might prefer card, but if there's only one option like instant EFT, they'll use that method. By adding card, it means people will move from instant EFT to card, but that means your cost of acquisition or your price, your fee for that purchase becomes higher as a merchant. So it's like this interesting balancing act. The difference with crypto is that the source of funds is just so much different than having a bank account that just taps into different methods. And I think that's the interesting part. And what we've seen so far is, I mean, if you look at South Africa, estimated to be around 7 million plus users that actively uses crypto or trades in crypto on a daily basis. What's going to be interesting is to see like how this different source of funds play a role when it comes to consumer decisions. So adding crypto will not basically supplement another method or come in for like a card, etc., because people think about crypto differently. It's like a source of funds that you have that's not linked to your bank account. It's you think differently about it, and this expenditure behavior around that is also going to be super interesting. So I think this is a method that it makes sense to add, specifically if your user base touches on the type of people that have crypto. Often young people, we see people on like the higher lower end market, and then emerging people, young people that's in their working ages. Like all of these people like actively have trades in crypto, and I think it's going to be interesting to see, like going to Spar, Pick and Pay to buy a Sterry stamp, and you use your crypto wallet because crypto has been pumping the previous day. Like that becomes interesting, and we'll see how that goes. I think one thing we know, like cryptocurrency adoption globally will just increase, like in general, and it'll take different forms over time. But I think that in itself, and given the adoption that we've seen in South Africa, we work with some of the largest crypto providers in the country. Like there's a very strong case that this will just continue, and it allows users and merchants to tap into a different source of wealth and funds that they otherwise are not enabled to tap into through the traditional methods that we currently have. So that's going to be super interesting, and it'll definitely be interesting to see how users think around this when it comes to different industries and purchasing decisions.
Yeah, for sure. You had me at buying Sterry Stumpy with my crypto, so I'll give you a call when the day happens. Thanks, Deval. I think, yeah, great to hear from you on the crypto side. As I mentioned, you're super close to it with our clients. But I think in closing, we're at time now, so thanks everyone for joining. But I wanted to go back to this quadrant, and we've referenced it a lot throughout the call, but we can give you the external data, or anyone can, that provides you additional insight. But the first place to look at is at your own data, because you have that. If you can get super strong, look at your customer service queries, track your users on your app, watch them in store if you have that, track your social media analytics. Just understand your customers, track them, and then most importantly, classify them based on their behavior, and leverage then leverage the insights from the report to drive optimization for each archetype. That's the way to do it. And creating an infrastructure from a payments experience, or at least just like an online experience that allows you to be agile in like a very competitive and ever-shifting space, you really can't go wrong. So look, the space is competitive. So much can change in a year. We look forward to seeing what happens over the next year. If you have any questions, feel free to reach out to myself or Dierwold. You can also email us at sales@stitch.money. Happy to continue the conversation. But for now, that's it from us. Thank you so much, Dierwold, and we look forward to seeing you for the rest of the series.
Cool. Cheers. Cheers, Jess. Thanks. Ciao.